Good morning, America. Good afternoon from Germany. Here's Pascal speaking. Yes, after 3 days I'm live again, but you can still hear my voice is not here back completely. I'm still coughing and have some hoarseness, so a little bit difficulties to breathe with my nose, but yeah, I hope it will go like this. You can understand me, but this was the reason why I haven't been live this week. But let's go and dive into market data today, and let's see what happens today. Here in our economic calendar, I will switch to English for you, because we have in 3 minutes some important inflation data like core PCE price index, initial jobless claims like every week, and personal spending numbers. Also, Federal Reserve member Bowman will speak, and we have manufacturing index after the bell, 15 minutes when the market is open, and we have ISM manufacturing employment. So a lot of data today. The most important ones you see here, the 3-star events in about 2 minutes. I don't expect that the initial jobless claims will be different from last week. There are not many changes. You see the number is almost the same for the last weeks. Last week we have first time seen 240k. This was more than expected. So this is what Federal Reserve wants to see, higher initial jobless claims numbers. So this means that the inflation is coming down and there's less risk or less fear of higher interest rate hikes. We can also have a look at CME FedWatch tool. So the next meeting is in 13 days, in about 2 weeks. And we see yesterday there was the speech of Jerome Powell, and he talked about maybe some dovishness, smaller interest rate hike in the next meeting, and this is what we can see. Almost no change. So this was the interesting thing, almost no change, but market reacted heavily, more than 4.5% in the green for Nasdaq, but there was almost no change in expectation. So everything was priced in that there will be only 50 basis points interest rate hike instead of 75 basis points like the last times. But you can see there was no change. It was almost the same number 1 week before. There was a change from 1 month before, but 1 week before we already had the same numbers like yesterday. So almost no change. It's with 3/4 probability that we will have 50 basis points interest rate hike, but we haven't still reached the peak, so there's still some room for higher interest rates. But market was partying yesterday, so let's go to Nasdaq here, and we see we are back above 12,000 points. Let's see it on a day chart here. I have drawn some new lines. I gave you some updates about over the community tab here on YouTube. And the expiry of this December future will be on December 16th. Therefore, maybe the next week it's more interesting to trade already the March expiry, because if you want to be in a swing trade for more than a week, then this will be too near to expiry. Therefore, maybe already switch to March expiry. But for now, March expiry is not really liquid. You have more than 3 points difference in spread between bid and ask. Therefore, I will stick with December expiry for now. The levels are still the same because we are not at the high point from November 15th. So this will still be a major resistance level here. And this is where I want to short. So if we reach this level, I want to go in with more shorts. I already shorted yesterday at the closing, or right after the closing, at 12.057. So yeah, this movement is in my favor, but if we reach 12,100 or right above 12,100, I will short again more. So now let's see the numbers here, which just came in. Initial jobless claims a little bit lower than expected, so this is worse for the stock market because it means still inflation pressure. But you see here PCE price index lower than expected. This is good for the market. Also here price index month over month lower than expected. Personal spending just in line. So these numbers are good for the market, and therefore it's maybe rising up to the last highs, and these are the levels where I want to short some more Nasdaq futures here. I will open here my order book and I just enter my order here just to short some more at the high points when we reach them. So let's go back to the daily chart, and here we see the last high point was at 12,118.5 points. So we are almost there. This is where I want to short some more. Just go in here and short some more. Maybe right above 12,100. I will just enter 12,115. And if we go above, I can still go in with more. Okay, we are almost there, right above 12,100. If we cannot hold the levels, I can still step in a short if we didn't reach 12,115. Almost there, come on, one last point. Come on. It's 0.25 points. Are you joking? You are joking, come on. That's so crazy. Like the last time on Friday when we didn't hit the level for 0.75 points, and today it was 0.25 points. Oh dear day. Okay, I will show the first one now. Just step in. Even my limit is not hit here. Come on. Hit my limit. This is crazy. Some days it's like this, yeah? You want to short and the market just barely hits your limit. 12,114.75 and my limit was 12,150. This is crazy. Ah, here my limit was reached. Okay. The other one is still in place, so maybe we will hit on a second attempt here. Still bullish for now. Still some room to the upside. I will have a stop loss in place for about 100 or 150 points above this level here. So right above 12,220 will be my stop loss. So enough room to the upside for movements. And here my limit is reached. We are now at the high points from last time, November 15th. This should be a smaller resistance level. Let's see if it holds or if we can move above. Just log in my second account and open there also the same position. So maybe you are asking why I'm entering short positions, because I told you I'm bullish for the last month, December. And yes, I'm still bullish, so this is a trade against the main trend. I will short Nasdaq futures, but only for a small amount of time, only for 2 or 3 days maybe, just to see a smaller reversal here at the previous high points, because the last day here, this high movement was just crazy. More than 4.5% in the green. You can see here 4.7% in the green. So this is just too much in my expectation. For no new news, it was just already priced in the expectations of interest rate hikes, and therefore I think we will have to go back a little bit for some points, maybe 300 points. Let's see how far we can move back. This is why I want to enter some more shorts here. So I will enter now with another position here. And enter it. And some more of this here. So, okay. So I'm in my position I wanted to have now. Let's see if we can go lower. Inflation numbers were good. This is a good sign for the market. You see here my levels where I entered one contract of Nasdaq here at 12,127 and 3 of the smaller M&Q This is a contract size of 2, so 2 times Nasdaq. This is 20 times Nasdaq. So in total, this would be 26 times Nasdaq short. You see my entry levels here. And now I'm sitting and waiting for lower levels to come. Let's see where a potential take profit could be. Just let's draw some lines. Just delete the old ones. Maybe go on a 15-minute chart just to be more accurate with my Fibonacci levels. So I will go to the high point from today. If it is the high point, let's see. And then you see here where the whole movement started. This was 7:30 p.m. my time, so 1:30 p.m. Eastern time yesterday. This is where power began to speak, and then the whole movement started. This is where I will set my low point of Fibonacci. You can also take a lower level, the low of the day or the low of the previous day, whatever you want, but I would just to have this movement here, and therefore my 50% target would be right above 11,800 at 11,830. You could also take this level here at 11,900. You see there was a smaller consolidation for about half an hour. Sideways trading here. This could also be interesting for taking out some profits. So this would be my main target here, 50% rejection. But you can also take out some profits here at 11,900. Also a psychological level. So I will just see which level will be hit. And if we can hold this level here, then I can still go out with more than half of my position. But I want to close right here at 11,830. Then I want to be out of my position and maybe switch to a long again. I don't think that my previous level of 11,375 will be hit, because I don't think we will have a 100% reversal here, because I'm still bullish for the month of December. But this was just a too far movement here. Therefore we will probably see correction. If not today or tomorrow, then probably next week. I will just wait and see. And if we go above 12,220, I will be stop lossed out in my position. So let's see here. If you have some questions, just write them in the live stream chat and I can answer them. We will switch here to a 5-minute chart and see when the next economic data will come out. So next thing will be right after the market opens, 15 minutes after market open, manufacturing PMI and ISM manufacturing employment, half an hour after the market is open. So there can be more movements, but as you can see, it was a little bit higher than the last time. It was at 12,133 was the high point. So this was about 15 points higher than the last time. But as we talked about the last live streams, the technical analysis is not an exact science. So you have to take into account that we will sometimes just hit this level barely, like I wasn't in my order here. It wasn't filled just because of 0.25 points in the first attempt, but in the second attempt we just overshot it by 18 points or 15 points, and that's it. But the level is there, so it's on a day chart, so it's normal that it's not on point, but it's almost on point. You see, for now it's a resistance level. Let's see if it can hold until the market open and the next economic data comes out. So now to your questions. Are you still waiting for 11,375 to enter long on Nasdaq? No, I just answered this question. I'm not waiting for this level to come. You see, we were close to this level. We were at 11,465, so we were just 90 points above my level. So it was a little bit too greedy, if you want to say it like this, to enter my long position. It would have been a good position. You have seen the movement yesterday. I would have been able to make big profits, but I wasn't able to enter. And someone wrote me yesterday, if I wouldn't get FOMO because I missed now this movement. No, why should I? If I'm not in a position, I'm not at risk. So I don't fear of missing out something. That's not a problem for me, because like Castellani said, every day there's a new chance right around the corner. You don't have to run after a streetcar, nor do you have to run after a missed trade, because every day you will get new chances. And it's the same today. I have a new chance for entering a short trade. Maybe it's not as profitable as my long trade would have been, but I can make money. So I'm just patient. It's the most important thing, to be patient, just to wait for your levels to come. And one of my levels now has come. So this is the level where I wanted to short, just a smaller short position, just to trade 300, 200 or 300 points to the downside. Let's see if it works or if it doesn't work. How many years have I been trading? Is asking Chonky. I'm trading half my life, so I'm 33 years old, and I'm trading since I'm 16 years old. So it's more than half my life. I began trading in 2005 with a stock account. So with the signature of my parents, I was able to trade the blue chip stocks like Siemens, maybe you know, it's a German company. Yeah, I invested my first money I got by delivering papers. And it was my first 1,000 euro. And I invested everything, just all the amount on one stock, on Siemens. And after 1 month I had a 10% profit, and I sold it and I made 100 bucks. Yeah, it was nice with 16 years to have 100 bucks just by investments. And I figured out that I can trade more than just stocks. When I got 18, I traded some certificates, warrants, and later I traded CFDs, contracts for difference, so all this stuff that is not allowed in the US. And later I traded Forex, foreign exchange, and 10 years ago, 2012, I began trading options. Yeah, it's completely different to trading stocks or futures, because there are more dimensions than just direction. It's not only trading to the up or downside, but it's also trading volatility, trading time decay, and so on. So it's more complicated, but it also gives you more edges, more possibilities to make money. And this is why I like to trade options. From time to time, like here in my live streams, I also like to trade some futures, but 90% of the time I'm just trading options. Do you have a Discord group we can join? Yes, I can share you the link of my Discord, but it's a German Discord, so 95% of the people there speak German, write German. You can translate it if you want, but you can also you're free to speak English in a voice chat. So sometimes in the evening, in the power hour, I'm live in my voice chat, not live, but sometimes I'm there, I'm speaking German to my colleagues, but you are welcome to join and just to speak English, and then we will switch to English though, that you can understand everything. I will just provide you the link, just a second. Here. Create an invite, here's the invite. So, copy. So this is mainly for option traders, Discord, but you are free to join. As I told you, it's a German Discord, but you are free to write and to speak in English. Everyone will understand. So it's looking good. So resistance is still in place. Last 5-minute candles were red. It's still an uptrend. As you can see, we are above the moving averages. We are above parabolic SAR, and ADX is showing us an uptrend here. Let's see if we already changed on a 1 minute. Yes, we just changed. You see parabolic SAR just moved to the upside, to the high point here. We are below 9 EMA now. We just have to close with a candle below 9 EMA. Then the next support level will be 20 EMA level here. And then we will have at 12,050 the volume weighted average price, VWAP here. Yeah, it's not a strong trend on a 1 minute chart. You see here the red line is right at the 20 level, but we already crossed with ADX here. So the purple line is above the red line, and therefore it is establishing a downtrend on a 1 minute chart. Let's see on a 15 minute. Here it's still in an uptrend, also with ADX still in an uptrend, but it's maybe the turning point here. There's more selling pressure. Still 45 minutes until market open and 1 hour until the next news. Yeah, it was not the not a bad entry point here. I can bring it up again for you. You see the level where I entered 12,127, 12,122. So we almost hit the high point. Not too bad. But as you can see, sometimes it's difficult just to enter with a market order because markets are moving so fast that sometimes you just miss it. And that's why I like to enter with limit orders. And I placed my limit at 12,115 and it was just barely not hit in the first attempt here. It could have been that I would have missed it. So I entered with a one contract, one micro Nasdaq at 12,100. But the rest was at higher levels, as you have seen. So we are below 20 EMA on a 1 minute. Let's see 5 minute again. There we are still above all moving averages. So 9 EMA should be a smaller support now. As soon as we close below parabolic SAR, this dot will move above to the last high point and will signal a first move for a downtrend. Just have to be patient. So let's see if I'm already in the green with this trade. I already entered yesterday, as I told you, at 12,075 because, yeah, you never know if we really reach the last high point. Sometimes you miss just by some dozen points, and therefore I wanted to be in the trade already yesterday at the closing with a light position size, and are now in with full position size. It's not the same large position I wanted to enter for the long trade because, as I told you, I'm trading against the main trend here. The main trend is still the uptrend on a day chart, but I want to trade here for about 300 points to the downside. Yeah, it's looking good now. More selling pressure. Now we need to close in about 2 minutes. 5 minute candle will close, maybe right at the 9 EMA line, but below parabolic SAR. This will be a good sign. Let's see on a 1 minute chart. We are below 20 EMA level now, below the psychological 12,100. You see we crossed here ADX. Now we need further down movement for this trend to take on more strength. Yeah, it's always risky to enter a trade if you want to catch the highest point. So here you can never be sure that this will hold this level. As you have seen, we were just 15 points above the last high point, so it was really near, but sometimes it happens that the news are so good that this level will not hold. Even if you look on the day chart, then sometimes we just go above this level, and still yet it's not clear that we will make the whole 300 points I want to catch. We can still at the opening go higher and I can be stopped out. So this is the risk I will have to take for the swing trade, because I'm not trying to day trade it, nor am I trying to scalp it. So if you want to scalp, you are just in for some seconds. But as you can see here, it's looking really good now. The first movement is often the false one, the false direction. This is what we see. That's why I don't want to trade the news. I only use this outcome of the news just to enter a trade, because then I have volume and my levels will be hit. And when I have volume and my levels are hit, then it's more important, because as you can see, these levels are now intact. So it is a resistance because a lot of volume was traded there. So I use economic news as catalysts for entering or exiting trades, but I don't trade the news as the news. So I don't want to suggest or to expect something of the news and yeah, it's bullish, it's bearish. I don't care. I let the market decide if the news are bullish or bearish. Yeah, we know the news should be bullish because we had lower than expected numbers here with PCE price index, yeah, month over month. But you see here, price index is just in line, and spending is just in line, and jobless claims were lower than expected. So this is not good, but it's just a weekly number, so this is not so important like these monthly numbers, even if it's a 3-star event and this only a 2-star event. But you see what the market wants. Yeah, you see it wants to move at first to the upside to hit the important technical level and then to be rejected there. This is what I trade. I trade the chart and not the news, but I use the news for entering my trade, for having a catalyst which makes the market move. You see, parabolic SAR dot is now at the last high point here. So a first signal for a short trend. We are below 9 EMA. We are still above 20 EMA on a 5-minute chart, still above VWAP. But you can see the difference between DI plus and DI minus is now smaller, and we are waiting for the crossing here for signaling a change of direction on a 5-minute chart. On a 1 minute, you can already see it. You see, DI minus is here, DI plus is here, so it's signaling a short trend. And you see the red line is right at the 30 level, so it's signaling that there's more strength in this trend now, because we are below 9 EMA, below 20 EMA, but there's still some room to go. Yeah, most of the time trading is just waiting. You don't have to do anything. Just have your levels in place. You have seen it. We talked about it. I was live 5 minutes before the news came out. Everyone knew the levels with the last high points, and I was able to enter this trade here. You could close it out now and just say, okay, it's a nice day trade already. But you could make more if you would just be patient. Let's see the next important levels to the downside. So the next important one will be VWAP for sure, but we will also have, let's go on a higher time frame here. We will also have the Fibonacci level. You can see this is right at the lowest point of the day. So this was at 10:30 a.m. my time, 1.5 hours after the European market opened. At low point was 11,992, and you see Fibonacci level is at 11,988, so let's say 11,990. It's right in between. This should be the next support level, right below the 12,000 level. It's often that we just go below just to hit the last stop losses, which are at the 12,000 level or right below, just to trigger them and then causing a little bit of buying pressure again. This should act as a smaller resistance, support level. And if we go below, then our next level, 11,900, our first target level will already be hit. So we have 0.7% for the first level. I won't close out a position here. And 1.5% to the next level. Here I want to close a smaller part of my position, and here at 2% down I want to close the whole position size. Hello Rocket, nice to have you live here. I'm sorry that I was not able to announce it earlier. I just decided 10 minutes before my live stream that I want to go live. You can still hear my voice, it's not the best, so I just want to keep it simple, easy and simple. Not talk too much today. Just watch a little bit the chart moving. Drink enough water and tea. And I'm sure in about 2 days at the weekend it will be better again with my nose and my voice. So next week I should be able to give more live streams again. Yeah, I want to do 2 or 3 live streams a week. Not every day, just on the important days with important major news where we see something. Then I will go live right at the news before market opens, or in power hour when market closes, or maybe when the market closes and we have some important earnings, but earnings season is almost over now, so we still have some time for next earnings. But this is how I want to keep it for now. Just easy and convenient. Yeah, it's not really interesting to watch the chart because it's just trading sideways here. It's just boring to watch the chart. It's like watching paint dry. But you can see it's now really bearish. We are below all moving averages. We are below parabolic SAR. You see ADX is signaling a downtrend. The same on 5-minute chart. 20 EMA hold here, but now 9 EMA is acting as a smaller resistance here. Parabolic SAR is here. And we need a crossing of ADX here to signal more selling pressure to the downside. People say that we will have a Christmas rally. What are your thoughts about that? Yeah, I already talked about this. I'm still bullish for the last months of the year. Like in normal times, we have a good December. So December is one of the most green months in the trading year. And I still think that December will be green. But because yesterday was a really green day with more than 4.7% in the green, I think that we now today hit the last highs, and this is a major resistance. So therefore I think we will have to pull back just 200-300 points just to breathe a little bit. And then some new bulls can enter and they can ride the rally from lower levels with a better risk to reward ratio. This is what I want to see. This is all. That's why I think that I only want to be in this trade for 2 or 3 days, not more, because I don't want to trade against the main trend. You see, the main trend is up. We have higher lows, we have higher highs, and we probably will, on the next attempt, we will hit this level again and move above. So we will see the breakout. And this is what you can also trade. So the next time when we are at 11,900 and we are going above this level again, you can trade the breakout. You can trade at 12,130. You can take a long position and trade the breakout. It's also interesting to trade this. Yes, I'm short, Dylan. I can show my position again. Here you see. I know it's German, but I will explain it to you. This is the amount of contracts. So SLD means sold. This is English. Action is action. What did I do? I sold. So the amount of contracts, 3 contracts of M&Q, Micro, Nasdaq, Future, December expiry at 12,122.9. US dollar is the currency. CME is the stock exchange. My time was 2:35 p.m. minus 6 hours is Eastern time. This was the commission I paid, $1.71 for these 3 contracts. And here I opened one Nasdaq future, the larger one, with a multiplicator of 20. This here have a multiplicator of 2. So in total it's 26 times Nasdaq short. So 26 times this amount of dollar, 26 times 12,100. Then you will have the volume, the contract volume. I'm short. Where do I want to close my position? I want to close at 50% Fibonacci level. I drew a line here, you see, at around 11,830. We can move further below, but I just want to keep it simple and just to take 300 points to the downside here. 9 EMA acted as resistance. Second attempt now to push below 20 EMA. On a 1 minute, you can see 20 EMA acted as resistance. And you see now we have again a change the parabolic SAR. So it's changing more often on a 1 minute because we were just closing right above this dot here. Therefore, it went to the downside, to the lowest point here. and is signaling an uptrend. But ADX is a little bit slower. It's still signaling a downtrend. That's why I would never rely just on one indicator like parabolic SAR, because it's just giving a lot of false signals like here, especially on a low time frame like 1 minute. This is why I like to watch on a 5 minute or 15 minute, because I have less false signals. Yes, of course, sometimes you won't enter at the best point because the short signal was here when we were already down about 50 points. But you could still enter this short position if you want to trade the next 200 points to the downside. So there's enough room for profits. And if you would take the same stop loss as me at 12,220, then yeah, it's still a nice risk-reward ratio. Everything better than the 1-on-1 ratio is good. I like to have 1 to 3 or better. And this is the point here in my short trade. Some more selling pressure, half an hour. So you see, full hour candle close. So sometimes we will have more movement now when the full hour candle closed. These candles are so small because of the candles of yesterday. But when I zoom in, we will see the candle closed. It was a green candle, but it is looking a little bit like a doji. It has a big corpus, but you see here on the upside a wick, on the downside a wick. And this means that we can move to the downside again. Let's see it on a 15-minute time frame. Second red candle building here on a 30-minute time frame. Yeah, here it's looking better like a doji, you see. Huge wick on the up and then on the downside, just a small candle body here. But it's starting to establish the downtrend. We just see the downtrend on a 1 and 5 minute. We are still waiting for the 15 and 30 minute to also show the turnaround to the downside. Sometimes trading is easy when you know where you want to catch your levels and when you are prepared. You just have to know that the future levels are the important ones. Not QQQ, not TQQQ, not SQQQ, especially not the leverage ETF, because the levels will change every day because of path dependency. Therefore you will have to watch at Nasdaq futures. And that is at the right expiry, because December expiry is the most important one. Let's just bring this up. CME. I will just show you the different expiries of Nasdaq future, because there's more than one expiry. This is just the front expiry, so this month, but we will have every quarter we will have one expiry. So I will show you now. Here, just bring this here. So you can see now that there's more than one expiry. So the next expiry would be March 2023, then June, so every quarter, then September, and then December. But you can see that there was no trading volume in these expiries in the future here. And you see here only 6 contracts have been traded in June. So this is not important. What is important is the next expiry, because here you see the large volume. So this means a small spread between bid and ask. And here you can see already 2,700 contracts have been traded. But there's still time until December 16th when this future expires. And then March will become more important. Because then there will be traded more March contracts when the expiry of December contract is near. Let's see the settlements. Here you see the open interest. So how many contracts are still open? And you see 48,000 contracts are open in December expiry, and in March only 5,000. But this will change, so this number will decrease and this number will increase as more as we come to the expiry of December 16th. So volume here will increase, volume here will decrease. So future traders, especially swing traders, will have to change from December expiry to March expiry, because what will happen on December 16th, there's a cash settlement. So this contract will expire and you will just get the money. So from the last settlement price, so you see here the last settlement price of yesterday, 12,042 points. This means that if this would be on the last day when there's the expiry, you would get $12,042.25 for each contract. So it depends on if you have MNQ or NQ. NQ is times 20 and MNQ is times 2. So you would get about $24,084.50 for every MNQ contract. And for every NQ contract, you have to multiply by 20 this amount. So every point in NASDAQ is $1 times the multiplicator of the contract size. And this is what you will get at the end at the settlement. No stocks, no other contracts. You will have to do the rollover yourself. So you will have to close. So if you are in a long position, you have to sell this contract and you have to reopen the long position in a March contract. And if you are in a short position, you have to close, you have to buy, and you have to reopen the short in a March contract. This is what we will see in the next 2 weeks. A lot of closing out of contracts and switching to the March expiry. Still trading sideways here. Still 23 minutes until market opens. So Bowman will begin to speak right at market open, but he will probably say the same things as yesterday. Jerome Powell. So mostly there's nothing important that these FOMC members will talk about. Only 2-star events. The only one is the chairman, Federal Reserve Chairman Jerome Powell. He is the only one with 3 stars when he holds a speech. Yeah, manufacturing and ISM can be important. It depends on the outcome. Let's see for tomorrow. Tomorrow is the first Friday of the month, and there we will have non-farm payrolls. So this is also important. Figure there will be a lot movement, especially in the currencies, in Euro USD, and you see the last month, every time was a higher number than expected. So the forecast was too low. Maybe it's the same thing tomorrow. What happens when the number is higher than expected? So this means that there's a lot of job creation in the non-farming sector, and therefore this means that the economy, the US economy, is strong. So there will be more fear of inflation risk because of more jobs, more job creation. So this will cause the market to go down, but also Euro USD will get down. So the US dollar will get stronger. And if the number is lower than expected, then it's just the opposite. So market will rise because there's less risk of higher inflation. Because if less people earn money, then they will have less money to spend. And therefore, there's less risk for higher price levels. Because the companies are not able to set higher prices if nobody wants to pay for it and is able or willing to pay higher prices. So lower than expected numbers in non-farm payrolls mean the market will rise and Euro USD will weaken because it means less stronger job market and less risk of higher interest rates, and therefore currency will weaken. So there was a first sign, it was yesterday I think. Here you see ADP non-farm employment. So this number is always 2 days before non-farm payrolls. And you see this was a lot lower than expected. Let's see this number here, how the expectations were. And you also see here the last 2 times, in September and October numbers, they were also higher than expected. But yesterday, they were a lot lower than expected. And this also caused the market to rise. Because again, if the numbers are weaker than expected, this means less risk of inflation, and therefore less fear of higher interest rate hikes. This is what Federal Reserve wants to see. A weakening of job market. So, unfortunately, I am on a one-on-one coaching tomorrow, so I'm not able to live stream non-farm payrolls. But I will be right before the market opens live, and then we can discuss the outcome of the numbers. The market assumed a Fed pivot next month. No, the market doesn't assume a Fed pivot next month. Let's talk about the Fed pivot. So I already talked about this, I think, 2 weeks ago in one of my last live streams. So let's see. December 14th is the next Federal Reserve meeting. So they expect a rise of interest rates by 50 basis points. You see, current level is 3.75 to 4%. And they expect an interest rate hike to 4.25 to 4.5%. So this means 50 basis points, 0.5% in December. Let's see February. They still expect an interest rate hike. Yeah, you see here. This would be just the same level. About 50% expect that we will have the same level. So no more interest rate hike. But here, this would be 25 more basis points. And this would be 50 basis points, yeah, 8% expectancy. Let's see March. In March, we see 46% probability for interest level at 4.75 to 5%. Let's compare it here to February. In February, you see there's more expectancy for lower levels. In March, we see expectancy is for 5%, or some also think that we can rise for higher levels up to 5% or 5.25%. And May, there you see lower levels again, 4.75 to 5%. So where will be the Fed pivot? The Fed pivot will be around March, March here, 22nd, or May 3rd, around 5%. So 5 to 5.25%. There is the Fed pivot to be expected as right now. It can change every day. As you can see here, expectancy changed here from last week, from last month, to now about 80% expectancy for 50 basis points. So it's not going as far as it was in the last Federal Reserve meetings with 75 basis points. Now it's slowing down, only 50 basis points, but it's still rising. A normal, before there was COVID, we only normally had 25 basis points up or down movements. So 50 basis points was really a lot. It was really seldom to see 50 basis points movements in rate hikes. And the last times we had 75 basis points. All the last Federal Reserve meetings were 75 basis points rate hikes. So it's really crazy how fast they moved up the interest rate levels. But now everyone is clapping their hands and saying, yeah, only 50 basis points. But it's still 50 basis points compared to the last years before COVID. It's still crazy how fast the interest rates are rising. And this is causing problems, especially for housing market, for labor market, and so on. And these problems will come later. It's just the beginning now. So in the beginning of next year, so I expect in the first quarter of 2023, we will see all the outcomes of this high interest rate level, of this fast rising of interest rates. So housing market prices will have to come down. There will be a lot less spending on housing because interest rate levels are so high that it's just not affordable anymore for a lot of families. Therefore, less demand means a lot more of houses will be on the market, or they will have to lower their prices to get sold. And this is what we will especially see in the first quarter next year. And also the initial jobless claims will probably go up, because you have already seen the numbers from tech companies, the layoffs from Amazon, from all the tech companies, Apple and others. So we will see more layoffs in the first quarter next year, and this will slow down inflation risk. And then Federal Reserve will probably pivot here around March next year. Do you primarily trade Nasdaq futures and just do other smaller options plays on other stocks? Yes, when I day trade or swing trade, I mainly trade Nasdaq futures because it's a very, very liquid one. I also trade other futures like sugar, for example. Here I shorted sugar. We talked about this in one of my last live streams. I shorted sugar here at the level of 2030 here. I will just show you on a higher time frame that you can see why I shorted it here. You see, there were a lot of green days, consecutive green days, and then suddenly we saw this candle here, a doji. You see this huge wick on the upside, and the high point was right at the resistance level here. You see, there was a lot of high points here, and there was a high point here. So this is an important candle, an important high point. I wanted to enter, but I just missed at the end of the day to enter this trade. And then you see on the Thursday here we had a huge down movement, and I said, oh damn, I missed this trade. But on the Friday we opened lower with a gap down, and we went back up to this candle here, and there was my limit order here at 0.2030. And I managed to enter here with 5 contracts short in sugar. So I shorted sugar future, and I want to short to this level here. So maybe here at the high points there's a smaller smaller support level, but also here at these Fibonacci levels, you see I've drawn a Fibonacci from this low level to this high level here. Yeah, we were at the 50% level. We had a smaller rejection here, you can see, but I'm still in the trend, and I want to wait for lower levels to come. And I want to close out maybe here, right below the 0.19 level, or here. I want to close out my position and take profits. So I not only trade Nasdaq futures, but mainly Nasdaq futures. The rest I do trade, 90% of the time I do trade stock options or future options. I also have positions in natural gas and crude oil. So let's talk about these. Natural gas. There was a lot of volatility in natural gas. So natural gas went up more than 20% in just a trading week. And then we went down again. And you can see volatility. This is implied volatility of natural gas. You see the spike in natural gas volatility. Implied volatility went up to 175% implied volatility. So this is the expected movement for a year of natural gas. And you see we were just at 115. Even this was a high implied volatility, because you see here in September and August we were at lower levels at around 100%, and there we were at 175, just crazy. So you got a lot of premium for options because everyone was in fear of a further rise of natural gas prices. And then I shorted options. So I sell options to get and collect the premium. But I didn't sell a call, I sold a put. And now you see a huge drop in volatility here. So now we are back at 102%. And even if natural gas prices went down, so now we are at lower price levels than where I entered the short position. But I made money because of volatility dropping. So it's not just the direction you trade, you also trade volatility and theta decay. So every time that goes by is in my favor, because time value is going out of the option. And therefore I'm now in the green with my position with, 66%. So 66% of my initial premium, I got 16 cents per option. And this is about $1,600, because every natural gas contract is times 10,000. So it's larger than a stock contract. Stock options have a multiplier of 100. Natural gas, there is a 1 natural gas future behind an option, and one natural gas future is 10,000 times the price here, and therefore I got $1,600 premium when I sold the option. But this option is now worth only 6 cents. So I can buy it back for only 6 cents instead of 16 cents where I sold it. And the difference, the 10 cents times 10,000, would be my profit. So I would make $1,000 profit. And the same with natural gas, with crude oil. I sold, where's my crude oil chart here? I sold right here. I sold a put option with strike of 59. We talked about this in one of my previous live streams. Then we went back up here. I should have closed right here because I was already 45% in the green. But then crude oil went down again, even lower, and was just break even again. But you can see the last 4 days we went green again, and implied volatility went down. So you see that we are not really higher than here. But now my position is not 45% in the green, but it's 63% in the green. Why? Because time went by. So there was the seller decay. Time value went out of the option premium. And volatility went down. So if there's less fear, less implied volatility, less expectancy of movement in the underlying, then there will be less option premium. So I sold the option for 95 cents, 95 times 1,000, because with crude oil you have contract size of 1,000. Yeah, one crude oil future is 1,000 barrel of oil, and I sold it for 95 cents. I sold 2 contracts, so 2 times $950 is $1,900. And now the price is at 34 cents. This is why I'm 63% in the green, and I would make $1,200 if I would close this position now. But I'm aiming for 80% profit. Therefore, I'm still holding this position, and every day that goes by, I will make $17 just by nothing happening. Just staying at the same price level, staying at the same implied volatility level. Every day option premium will decay, because there's less time until expiry, and therefore I will make money if nothing happens. And that's the interesting thing. You can just sit and wait, and the time decay is in your favor. This is what I like when I sell options, because here you see now I'm waiting for half an hour. Nothing happened. It's just trading sideways. It's boring, but you are not paid for this. I'm only paid if the Nasdaq is moving down, because I need direction when I trade futures. But you don't need direction when you trade options. You can also make money just by implied volatility going up or down, or by time passing by. Six minutes until the market opens. If you have questions, just ask them in the live chat here. What else do we have here? Tesla. Some were asking about Tesla. It's 1.4% in the green before the market opened. Maybe you can remember that I was entering a short position here at the 200 level, but this was an option position. I sold a 240 strike call, expiry in December 16th. And then we went down, you see here, and at the opening of this candle, this was a Monday, I closed my position with 80% profit. So I bought back the option for only 20% of the price I opened it here when I sold it. So I had 80% profit in 1 week. Then you see we made another bottom here, and we went back up again. But now the 200 level should again act as a resistance. So you could do again the same play, maybe with January expiry, maybe with lower strike level, I will see. But this is an important level. 200 is again an important level, and it could hold a second time here. Let's see the option prices of Tesla from yesterday. we will have to wait 5 minutes for new option prices because there's no possibility to trade options pre-market. I normally just trade monthly expirations, not the weekly ones, because there's more trading volume and smaller spread between bid and ask. And I trade the first standard deviation at delta 16. This is this one here for the puts, but I want to trade the calls. Therefore I'm looking on the left side here. Delta 16 would be 250 strike, so I could even go higher with my strike to a 250 level, and I would still make $2.70. Yeah, maybe the price will be higher when market opens because Tesla stock is higher. So this times 100 means $270 per contract that you would earn as premium when you sell a 250 strike call. And then when Tesla is below 250 at expiry on January 20th, then you can keep the whole premium. But I don't want to wait for 50 days until January 20th. So I want to buy this option back when I made 80% of the profit. And this happens sometimes after 1 or 2 weeks. So I don't have to wait 50 days to make 100% when I can make 80% after just 2 or 3 weeks. Therefore I will leave my trade with 80% profit when I reach my target. So I can set a limit price level, and as soon as it is hit, my option contract is closed and I'm out of it. I have no more risk. Yeah, let's see if how soon we can reach the 200 level again, and then I will probably try to enter this position to short Tesla again, because I still think that it's weaker than the whole market. In addition to selling options and zero DTE spread, do you trade other option strategies? Yeah, mainly I trade naked options, because I have a larger account. On the smaller accounts from my family members, I do trade spreads, like bear call spreads or bull put spreads, so credit spreads. Sometimes iron condors, so just like a strangle but secured on both sides to the up and down side. You can trade more crazy option combinations, but I don't like to trade calendar spreads or some more complicated things. I want to just take it easy and to always know where my risk is and how big my risk is, and it's just easier if you trade your spreads in the same expiry. And also zero DTE option trading is just still in testing phase, so I traded for 2 weeks now, but not every day, just from time to time. I'm looking for some interesting positions, but I'm trading it more directional. So if I want to trade SPX options today, let's see, no, I don't have it. Here it is open. Here you could also enter before market opens, because you are able to trade around the clock. There's just 15 minutes of trading pause right before the opening, so we have to wait 1 more minute and then we will see the current prices again. And then you could enter, for example, a bear call spread. If you think that the market will drop further, you could enter bear call spread. Let's see here, maybe 4,140 to 4,155. I like to trade a 15 points spread. You see here you will get about 86 cents, maybe more. I want to have these trades with $1 or more as premium. So this will be times 100. So $1 will mean that you will earn $100. $1 per option or per contract combination will mean that you will earn $100 per contract combination. Sometimes you need to go lower because the price level already dropped. Like now, you see here is the current SPX index level, 4,086 points. Therefore, we will probably have to go lower to a level like here. This is delta 5. And then you go 15 points above it, 4,145, like here. And then you will earn $1.16. Yeah, it's not a bad one. Maybe I will try to enter this one. Just enter on this account here. 4,130 to 4,145. Just want to enter 2 at the price of what is the current price level, 130. Let's enter this, and my order is in place. So as soon as we see 130, you see here's my order, 2 contracts at 130, and here I got the fill. So now I'm in a position with a bear call spread. I shorted the 4,130, and I bought the 4,145 just to be secured, to have less margin. And you see here the bear spread. So I will earn money as long as we stay below 4,130 points until the day ends. So you see 0 days until expiry. And you see the current level is 4,090 points in S&P 500. So we only have 40 points to my short strike. But there will be a lot of theta decay because this option will expire at the closing today. And when I'm expecting Nasdaq to go down, then probably S&P 500 will also go down, because the same stocks as in Nasdaq are also in the S&P 500. Sometimes we see a pullback, then I can re-enter with my second part of the position. So I will just set up the same trade again. 2 contracts for a higher price level. So maybe 150 or 170, whatever you want. Here, you know, see, price went up to 150. I can now enter my second price level here. And sometimes I'm hit with my second tranche, and I also have a third one when I'm trading 0 DTE at 170. You see it's just 3 or 4 points higher, but a lot of movement in these 0 DTE options. So there's the execution here, and we went higher to 170 to 155. So I can just enter my third position. Let's enter it here. Again, 2 contracts for about 175. This is my price level here. And if we don't hit it, then it's not a big problem, because I have already 4 contracts in place now. Now I can earn money with these 4 contracts. This is Nasdaq, but S&P is moving in the same direction. You can also see SPX index. Just see a chart there. So you see the opening here. Because this is the index, it closes when the stock market closes, and it opens when stock market reopens. You see there is a small up gap, but in a lot of times it closes the gap and then decides for a new direction. You see it's already moving down again, the price levels. Sometimes a lot of fear at the opening. You can just use it to enter your trades at a decent price and then just play it. I want to close these trades for about 60% of profit. So as soon as we move down, I can close out these trades with about 60% profit. You can see it again here where I opened $1.30, $1.50. This bear call spread. We already know that in the first minutes, in the first 5, 10 or 15 minutes, there's a lot of movement, sometimes trying to push in the false direction, retesting the previous high from pre-market and then pulling back again. So just being patient and waiting for the news to come out in about 10 minutes. Here the news, just do it a little smaller. So manufacturing PMI here in 9 minutes. You can see previous high points here. We traded along sideways here. So this is acting now as a resistance. It can still push higher because we are above the moving averages now. But sometimes it's just retesting these previous levels to be rejected and then pulling down again. Because on a 5-minute time frame, you see we are still in a downtrend with parabolic SAR. ADX crossed already here now to a downtrend. You see DI minus is above DI plus. It's not a strong trend anymore because it's weakening here. Because we went up, we went down, but just trading sideways here. So it's not a strong trend anymore. And on a 1-minute chart, you see we are about to cross again. So you see now I have to cough again because it's more difficult as I speak. So I will keep it short. Be live for the next 10 minutes until the news came out. Then I will close out the live stream. Yeah, resistance level. You see the doji here on a 1-minute chart. It's not really an important one on a 1-minute chart, but you can see doji, small body, a lot of wicks on the down and upside, causing a correction. Yeah, before I forget it, just leave a thumbs up for this live stream. And if you haven't done it right now, then please subscribe to my channel and activate the bell to be informed when I go live the next time. 1280. Still fighting for the levels. Minutes. Where the Tesla open, 1.7% in the green, almost at my 200 level. It's getting more and more interesting. I barely reached 199. Let's see. And you see the spread is now down to $1. Even if SPX is higher now, we are down to $1 because we are 5 points lower now. So only 5 points, but the premium decreased a lot, as you can see here. So I could already close it and make some money, but I'm still waiting for 60% profit. So this position is now 34% in the green, this option position with 0 DTE options. Let's go back to Tesla here, to my 250 strike. This is now delta 15.4, and you would get $3 for this. Nice. It's not bad. Yeah, I'm waiting a little bit, maybe just for the 200 level to come, maybe to just overshoot it, take out some stop losses from short sellers there, Then I will enter it. I can already set it up. SPAX, no, Tesla. My second screen. So I will just do it with a naked call. So I will short this 250 strike call in January 20 years. Sorry. Yeah, it's time for the news to come. To close my live stream. To take a little rest. I will short 2 contracts for about $3.30. Yeah, let's see where we exactly hit the high points. But I think the delta is 15 cents. So if we go up for $2 more, this will mean 2 times 15 cents will mean 30 cents higher. Then we will probably hit 330, 340 levels. And then I should be in my position. So let's maybe go to 335. And there I want to short my contracts. So, okay, my order is in place. Shorting this 250 strike call for $3.35. As soon as we hit the level, my order will be filled. And for this to come, we probably need Tesla to go up $2 to 200 level. And then we should be at $3.35. Okay, back to Nasdaq. Where are we? Still trading sideways. Yeah, and this is the reason why I don't like to trade futures so often, because still making no money, just trading sideways. But with options, I'm already making money because of standard decay. Yeah, 0 DTE option is 34% in the green. Tesla option is not open yet. And all the other positions are in the green. Sugar is falling. And Nasdaq, natural gas is green. Crude oil position is green. Amazon position is green. I still have an Amazon position. There I can show you. That's interesting to see because I open it right here. You see, this is a weekly chart, but I want to go on a daily chart. Don't want to miss the news in 2 minutes. Just want to do it quick. So I opened the position right here at the earnings. I sold a 85 strike put. So you see 85. We barely hit here the 85, but then we went up again, and we are trading sideways. You see, implied volatility just went sideways. It's now at a low point. Sorry. But I'm up with my position, with my 85 strike call expiring on December 16th. I'm up 72%. So I'm just waiting for some more cents, and then I will have the buyback. And I will have earned 80% with my option trade just by the stock going sideways. So if you would have bought Amazon here, you wouldn't have made any money for more than 4 weeks. But with my option position, I can make money just by trading sideways with the stock. Yeah, this is the important thing and the interesting thing why I do trade options. So now back to the news. 1 minute. 30 seconds. Yeah, it's trying to push higher here. 12,100 level. Bulls are back. They want to retest the highs maybe during normal trading hours. Everything possible. Three seconds. And the news out. 47.7, so almost in line. No big difference. A little bit higher than expected, but almost in line. Nothing really important. Yeah, that's it for now. In 14 minutes we'll have ISM manufacturing PMI. You see here the expectation. But I think this will also be about in line. So no major movement from these news. Let's see if we can see the retest maybe at the high points and then see the rejection from there. But for now, I will close out my live stream because you can hear my voice is not getting better if I'm online for longer. And therefore I will close for now. This evening I will be live on my German option trading channel on finance.coach. So if you want to follow, go on finance.coach, but it will be on German with my trading colleague Mirko. In German, you can add automatic translation to English, but I don't know how good it is. So maybe wait for my next live stream. Maybe tomorrow at Market Open. I will let you know. Don't forget to subscribe to the channel and to click the bell. Have a nice trading day and see you tomorrow.